Let me get your take on this. Do you think that the out-of-state capital is going to go down in the future, or is it just going to keep going up? Because right now is an interesting time in the market where the market's relatively cold on the buy side right now, but I think that's rate dependent. I think it will get hot again. Do you think it will be out-of-state investors or?
I think it'll be both. I mean, obviously funds have slowed, or quit.
Can't make the numbers.
Right. Yeah, they quit buying. I think they're going to get back in the game. I don't think it's going to be like it was in 2010 to 2015 and on up. I just don't think that there's so many homes they bought. And, I'll be honest, when they were buying, there were a group of investors that I was a part of that we said those guys are going to get crushed. Like they can't buy single families and make them work. What we had no idea of is the appreciation that our market was about to go through. So if you look at and I don't know their numbers, but if you had someone that could come in and give you really insight into how their cash flow was, I'm going to guess it wasn't great. We've had a lot of people that work for us that used to work for America's Homes for Rent, and they just said that years 2 and 3, when they were here, they started getting more stingy with turnovers because they were having a hard time making cash flow work for them. But the saving grace, which is always the saving grace in real estate, is their equity position.
Every mentor I have, when I ask them about their portfolio and where they're making money from, every single one says the same thing. I don't take the cash flow from my rentals, and I refinance my portfolio and live off the equity. But then I'll also hear you can't buy groceries with equity. So like,
that's right.
You have to buy smart to get into a position where it's going to gain. And that's like when you're stuck at 2 or 3 properties. And for me, I mean, I have over 6 figures in the real estate market, no return. Like that's been over the past year, right?
Yeah.
Like it's a train that's just halted. I can't even, get cold to get the train to start going. Before we started recording, you told me that you have roughly, it was under 6 figures in the marketplace.
Yeah, we proudly can say that Scott and I've invested less than $100,000 in all of the properties that we own. Fair.
I would have
already
figured out how to
surpassed
do
you,
that.
sadly.
Yeah.
Starting in 2021, it was a little different.
Yeah, I mean, we were doing kind of the Burr method before Burr method was coined, that term.
By the time it was coined, it was kind of gone, like heading out the door.
Yeah, so we did a lot of that. Back when we were buying a lot of duplexes, the rule of thumb was you used the cash flow from one side of the duplex to pay your mortgage. That was the barometer.
I love that.
It's the 1% rule now.
Well, the 1% rule would have been terrible. Like that to us have been like we would demand more than that.
Right.
It was the 2% rule.
Probably. We didn't use like a metric that way. We just, with duplexes, that is a metric we use. So our mortgage payment is $750. Can we get $750 aside?
Yeah.
And most of the time we can get something around that.
I'm seeing, we're on the tail end of 23, 24 where we struggled so much with the tick in interest. For the first time ever, I'm putting deal sheets together that are above the coined 1% rule, where that's actually possible. Like tomorrow, I'm setting up duplexes that are at 2,600, and we're gonna list at like 185. And I think that it comes in part of rent rates caught up to what has happened over the past 2 years. But prior to that,
prices have cooled a little bit too.
They have cooled for sure, but I guarantee that duplex goes $25,000 over asking in December. On a transactional down. I mean, we're down like 30% in the past quarter, if not more, on standard transactions. I think across the United States, there's been 14% less, or this is like the lowest year in the past decade by 14%. It's insane.
We're at recessionary levels of real estate transactions.
About transactions, yeah.
The same level as 2009.
Yeah.
Yeah, everyone's frozen because it's hard. I mean, you think about the houses you all live in and, the equity you have and maybe a house you want to buy. It's like, well, I'm sitting at an interest rate that's so favorable. And why would I want to buy a house and double my interest rate?
Right.
And probably double your payment easily. So it's just put a chokehold on the market. It's pretty remarkable what interest rates have done to our market.